Hi, are you thinking of exiting your mutual fund investments, especially in the value fund category? Since now these funds have started showing some positive returns after a very long wait. I'm Samir Machwe from FINDAS and I help people like you to invest your money such that you generate decent returns without making any losses. That is what I do. In this short video, I want to tell you exactly what you should be doing with these value funds that are there in your portfolio. If at all you have these value funds, make sure you watch this video till the end. I'm myself an investor in two of these funds from last maybe 4 or 5 years or more. I'm basically invested in the Aditya Birla Pure Value Fund and the L&T India Value Fund. Both these funds I have been seeing negative returns since at least 2 years, as far as my memory goes. So they are not performing as per my expectation also, and I am experiencing that pain of negative returns as you may also be doing it. But unfortunately, that is history, and we cannot do anything about that right now. So if you have waited this long, if you have waited for 2 3 years and the positive returns have started showing it, then I don't see much sense in quitting at this point of time, uh, getting out of these funds. Rather, I would put it this way, that the chances now are high that we could see a turnaround in this value funds. I've been doing some research on what are the value funds going to do. So this video I prepared out of that research in case you are also experiencing the same pain of negative returns like I am experiencing. So let us first understand what is value investing. What does it mean? Basically, to put it in very simple words, value investing means investing in out of flavor stocks, the stocks which are currently out of flavor, but these stocks are believed to have high inherent value. Means the business is good, it's a sound business, but this inherent value is not reflected in the stock price. Hence, the stock is trading at a cheap valuation, and hence that is what means value investing. So the stocks are trading at a very low price. Nobody is interested in buying those stocks, and you buy at that time. That style of investing is the value investing, with the possibility that these stocks, these businesses may eventually get re-rated, give us higher rating, and thereby we can make a profit. This is how you look at this situation of value investing. Since last 2 years, most of the value stocks who have been out of flavor, you can go and check the portfolios of many of these value funds and you will find the names of all these stocks there. Suddenly all these stocks have become the investors attention. They have caught the investors attention in the last 4 to 6 months, and people are buying these stocks, and then the returns of all these value funds which were non-performing for maybe last 2 3 years have suddenly turned positive. And the people who are now not patients, they have lost their patience, they want to get out of this fund very very quickly. That is how the thinking is going on, right? So value fund returns are up. All of us know all portfolios, almost every single value fund is in the green now, right? So if you are on the verge of quitting this fund, hold on for a few moments. Just see what information I'm going to share, and then you can take a call, right? So there are some reasons I believe that there could be good return on investment generated in these value funds in the current year 2021. That is what is my belief. The reason number one that I believe is, first is the growth stocks, the front running stocks had a very, very good bull run, especially after the COVID fall, and they have valuations have reached like the sky. So investors have started bargain hunting. They are on lookout for good companies trading at lower prices, and these value stocks, which are believed to have sound businesses, are now cheap and everybody is going to buy them. That is the that has caught the investor attention. So that is the reason one. So there is very high probability that they will go up from here rather than going down or going sideways. That is the reason number one. Reason number two, historically, if we see, value investing always gives better returns when there is a strong economic growth. We had a very bad patch in the last 2 years. The COVID-19 pandemic and the stock markets were like melted down, a big fall, 40% fall in the Indian market. And the world economies are recovering from all this uh, disruption caused by the COVID thing, including India. Because of the problems with China, the international community is looking on India big time for investing their money. So there is a very very high chance that we'll see very good high growth in the next 5 to 10 years from here. That is the visibility, and this particular period of high economic growth augurs well for these value funds. Hence it is more prudent now to wait for some time rather than quit immediately just by seeing some positive returns right now. So that is my take. Third reason, if we see that normally, if the nominal bond yields go up, the value stocks also go up. That is what is the relation. They seem to have a direct proportionate relation with each other. And recently, there has been a rise in the bond yields. That is why some small corrections are happening in the stock market. But this is a good thing for the value stocks. So we have some reason to believe that the value stocks have just begun their upward journey. So stay put. Reason number four, this is according to me the most important reason. If you have been a patient investor, if you have been holding on to this so-called non-performing value funds in your portfolio for last 2, 3, 4 years, then this patience will get paid off. The value of these funds is increasing. The patient investor is also always paid well. So my take is, since you have been waiting for so long, why not wait for some more time and take your reward? All of us know that there is some herd mentality that always goes on in the stock market, right? Now, this herd mentality has a consequence. What is the consequence? There are latecomers to the rally. Suddenly, the stocks are going up, people watch, 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 and then they enter late. So, all these latecomers will join the party late. They are all those uninformed investors who don't have much data, who don't have much financial knowledge. So they are the people who create that mad rush to buy because the stock has appreciated for the last 2 months, 6 months, 8 months, or a year. Then they will suddenly realize that it's now time to buy. This value stock rally towards the fag end would be fueled by this uninformed investor, and I feel that is a good time to quit. At least that is what I plan to do with my portfolio. About you, you have to think your own strategy, but this is what I plan to do with my own strategy, right? So besides this, you must know a few things about investing in mutual funds. When you are investing in mutual fund in general and specific to value funds, there are some things that you should know. I will share them with you. First, when you invest in value fund, it is it takes very very long time to pick up. It will test your patience. Sometimes they may not do anything for 4 or 5 years, and you will become impatient and you will sell them at loss. That is how the value funds act. We must know this design beforehand. And you may also face very very high volatility. If you went back and saw how the value funds cracked during the COVID-19 fall, you will understand what I'm saying. Very high volatility can be faced in these value funds, and long periods of underperformance. This is very typical of value funds. So if you are not a person who can take this, I recommend to stay away from such funds. First thing I recommend is do your risk profiling. Know your risk category. What is it? Can you take high risk? Can you take low risk? Can you take medium risk? Do that risk profiling. Once you know that, then understand that value funds are basically for those investors, for those people who have high risk taking ability, as well as an investment horizon of 8 years to the minimum. If you require that money only after 8, 9, 10 years, then I would say you should consider investing in value funds. Otherwise, just looking at the past return, because for example, the ABSL Pure Value Fund, excellent past record, but it has not performed in last 3 years. So just looking at past return may not be a good strategy to select a value fund. That is what I will say. Second recommendation is your maximum allocation, try to limit it to 10% in the whole portfolio to these value funds, right? Very, very important. This will reduce your overall risk and overall volatility. Your uh, portfolio will not fluctuate much. If you don't like that, then keep the asset allocation on the lower side for these value funds. So that is about the value funds. My recommendation is stay invested for some more time, see how they perform, and exit with decent profit, at least some double digit profit. That is what I will recommend. But to tell you one more fact, there is there are some ways by which you can manage your mutual fund investors much better way, that we have today very unique options wherein the money is invested in the same mutual funds that we are talking of, equity diversified mutual funds basically, and they are managed in such a way that the risk is drastically reduced, the volatility is also greatly reduced, and the losses are also greatly reduced, but it generates double digit returns. Such facilities, such methodologies are today available in the market. If you are interested in generating double digit returns, but you don't want to take the risk, but you don't want the volatility in portfolio, soon I will be conducting an online webinar on this subject, on this very unique investment opportunity. I'm going to share a link with this video. Just click that link and let me know if you are interested in this webinar. I will get back to you and let you know when this webinar is ready. I'm just in the process of shooting it right now, so it will be ready any day. So just share your information with me and I will get back to you, giving you one of the most unique opportunities to get double digit returns without much risk and with very little volatility. So thanks for watching. That's all for now. Bye bye and take care. See you soon. Have an abundant life.